Here's a question. If someone told you the UK economy was recovering, would you believe them? Your energy bills will say no. Your weekly shopping will likely say no too. Your mortgage rate will definitely say no. But according to the Office of National Statistics, there's a maybe. The latest PMI survey says, actually, it might well be. So who is right? Your wallet or the data? Let's find out. So let's start with the bad news because there's plenty of it. In the last 3 months of 2025, the UK recovery grew by 0.1%. Not 1%, 0.1. That missed all forecasts. The Bank of England expected 0.2. Even the optimist expected more. And when you zoom out to the full year picture, 2025 delivered 1.3% growth, which sounds passable until you realize 2024 managed 1.1. So in 12 months, with a new government, a new chancellor, and a whole lot of promises, we gained 0.2 percentage point. And it gets worse. The OBR, the government's own forecasters, has downgraded their forecast for 2026. They now expect just 1.1% growth. KPMG has put theirs to 1% flat. But here's the number that really matters and almost nobody talks about. The GDP per person is still falling. The economy is technically growing, yes, but the population is growing faster. So the pie is getting bigger, but your slice is getting smaller. That's the headline story. And if that's all you looked at, you'd say the economy is going nowhere. But it's not all you should be looking at. In February 2026, something happened that barely made the news. The UK Composite PMI, that's basically a survey of how businesses across the country are actually performing. It hits its highest level since April 2024. Service activity jumped. New orders increased. For the first time in months, businesses were talking about hiring, not cutting. Now, that PMI data isn't perfect, but historically, when it moves like this, GDP follows. And this reading points to roughly 0.3% growth in the first quarter of 2026. If that lands, it would be the strongest quarter in over a year. And that's not the only signal. Retail sales in January growing stronger than expected. Consumer spending, which drives about 2/3 of the UK economy, is showing signs of life. Inflation is trending down, which means the Bank of England now has room to cut interest rates. Cheaper borrowing means businesses invest, people spend, the cycle starts to turn. And there's one more thing. Go back to November 2025. After October's GDP contracted by 0.1%, November bounced back with 0.3% growth, beating every estimate. That's not a trend yet, but it is a pattern. Contradiction followed by a stronger than expected bounce. The data is whispering something. The question is whether anyone's been listening. So, is this a recovery? Honestly, it depends what you mean by that word. If recovery means the economy isn't shrinking, then yes, technically the UK is recovering. GDP is positive. The PMI is up. Some indicators are genuinely improving. But if recovery means things that are getting better for actual people, that's a much harder case to make. Wages are rising, but not fast enough to undo 3 years of accumulated inflation. The UK is growing, but slower than France, slower than Germany's forecast, and well behind the US. Business taxes just went up with the national insurance hike, and the structural problems, low productivity, trade frictions, and overstretched NHS, none of that has changed. Rachel Reeves herself won't use the word recovery. She keeps saying there's more to do. And when the Chancellor won't claim victory, that tells you something. So here's what I think the data actually says. The UK economy is not collapsing, is not entering a recession, but it's not recovering either. Not in any way that most people will recognize. It's growing just enough to avoid the worst headlines, but not nearly enough to change anyone's life. But there's a word for that. That's called stagflation. So what happens from here? 3 things to keep your eyes on. First, the Bank of England. If they cut rates this spring, that's rocket fuel for a real recovery. If they hold, we stay stuck. Second, Q1 GDP due in April. The PMI data says it could hit 0.3%. If it does, that changes the conversation entirely. And third, the spring budget. Reeves is boxed in. The OBI is given her a 1.1% growth forecast to work with. Does she stimulate or does she cut? Those three decisions will tell us whether 2026 is the year the UK economy actually turns around or the year we got used to stagflation. So your wallet or the data, who was right? Both, actually. The data says the UK economy is growing. Your wallet says it doesn't feel like it, but they're both telling the truth, because an economy can grow on paper while leaving most people behind. That's not a recession. That's not a recovery either. If you want to stay on top of what the UK economy actually means for your money, hit subscribe. I break this down every week. No spin, no noise, plain data.